Welcome to The Big Break Show, a podcast where we discuss short-term rentals, entrepreneurship, life, mindset, and everything in between. Here are your hosts, Rafa, Loza, and Jesse Vasquez.
Welcome to another episode of The Big Break Show. And today we're doing a double intro because during the other recording, Jesse said, welcome to The Big Break Show. Jesse, how you doing, buddy?
Did I really say welcome to The Big Break Show?
Yeah, you did.
Look at that. You know what, you guys? This is what Rafa takes from our entire 60-minute episode with Derrick of Nectar. He took that one thing that I already said, welcome to The Big Break Show. That's what you got from this whole thing, dude? Are you serious right now?
You know what? No, it popped in my mind as I was doing the intro. I was like, wait, Jesse already did an intro. We're going to have a double intro in this episode. That's funny. But no, all right, talking about, that's not what I picked up. What I picked up was Derrick from Nectar is a beast, great entrepreneur. And I'm excited for everybody to listen to this because it could be a very good opportunity for people to grow and expand their business based on the services that Nectar provides.
Yeah, totally, man. And I think that, for all of us, capital is always or has been an issue at some point, especially whether you're starting off or you're even seasoned. Capital will always be a need and not necessarily a problem, but how do you solve those problems? And I think Nectar and Derrick's team is really thoughtful, both on the educational side. This guy went to Harvard. Like, he's a smart dude. And then he worked for Goldman Sachs afterwards. So to be able to marry like Harvard graduate, Goldman Sachs education, because that's obviously an education too, working in that specific field, and then being able to help other investors, man, it's pretty cool. So you guys are definitely going to want to tap in, listen to this episode, because he drops a lot of really important information about blending money and borrowing and what's needed to be done and how to do it and how to actually, not have to leverage your personal property, which is another great thing.
Yeah, typically we like to go into the people's backgrounds or the guest backgrounds that we have on, but we talked the majority of this episode about Nectar because it was a very unique perspective. It's not like, I don't want to say it's working capital loans, but it's like loans based on, they're not even, I guess they are loans. They're loans based on the revenue of your company and what it does. So honestly, this could be a good opportunity for some of you guys out there who are listening, who are looking to expand or need capital to grow or just are in a pinch or something like that. So I'm excited for everybody to listen to it. Let us know what you guys think. Obviously, we always want you guys to tell us in the comments and give your feedback so we know we're going in the right direction. And the Midterm Rental Summit is coming, and I'll be speaking at it along with a lot of great other speakers. I'm actually excited for that, dude. It's going to be fun because not only, we talk about this often, right? Like, people don't really get to travel to San Diego and people don't really get to go to these events. And this is going to be a really good event because it's going to be very intimate. It's not like these 3,000 people show up where you don't even get the chance to actually really network because people go in groups together or they're just out there trying to push their business. This is going to be a true networking event where you get to learn from really intelligent people who are in the space, right? Jesse, yourself, who's going to be talking about midterm rentals, and we know everybody wants in on midterm rentals right now. So the Midterm Rental Summit is coming. April 31st.
April 30th to May 1st.
Yeah, April 30 to May 1st. Yeah, it's going to be fun, dude. And like I said, if you guys are there a day earlier, we can hang out, have a couple drinks, do some networking, smoke a couple cigars. Jesse buys the first shots. Only 100 people allowed. And then we go from there.
Yeah, man, I'm excited about it. Yeah, April 30th to May 1st, the tickets are selling out. So if you guys want to get the early bird rate, I would suggest you get them now because there's not very many left. And you can use the code Rafa when you purchase to get a discount on the ticket. So please make sure to do that. I look forward to seeing you guys there. It's going to be fun, man.
Yeah, I'm really excited for it. I'm very excited for it. It's going to be a good time. We'll put the link on the show notes. Again, use my code Rafa, R-A-F-A. It's going to give you a discount, and hope to see you guys there. It's going to be a good one. Other than that, we love you all. Enjoy the show.
Thanks, man.
Hey guys, Rafa here. A lot of you guys have been asking me if I have a course, if I teach, if I mentor my short-term rental business. And the answer is I do, actually. I just recently released my very first course. It has about 120 videos. If you're part of the monthly membership, we are adding 2 new videos a month in current issues or projects that I'm working on within the short-term rental business. And we do 1 monthly call live where you have access to me to ask me all the questions you want. So if you're interested in joining the course or if you want any more info, click the link below. It is application only. We only open it to a certain amount of students every month because we want people who are serious, who really want to be a part of this, who actually want to take their short-term rental business and grow it, or are starting from scratch and want to learn how to actually acquire properties doing rental arbitrage. If that's you, if you're serious and you really want to do this, click the link below, schedule a call with me or my team, and we'll get you going. Now back to the show.
What is up, everybody? Welcome to another episode of The Big Break Show. I'm here with my buddy Rafa Loza, and we have Derrick Barker, who is a CEO of a beautiful company that his kind of moving along, right, Derrick? You want to talk to us a little bit about that, about what you're doing at this specific moment with Nectar? And then I want to dive into your childhood, and we're going to dive into the fun stuff. I'm just kidding. We'll dive into your life, man, kind of where you came from, what areas you grew up in, and really learning about you. And then we'll obviously talk about Nectar. But for the purposes of this intro, you want to just dive into Nectar real quick, what Nectar is, and then we'll kind of jump into the weeds, or who you are actually. Let's do that.
All right. So I'm Derrick Barker. I'm the co-founder and CEO of Nectar. From Atlanta, a serial entrepreneur my whole life, mostly in the real estate space and finance. I had one real job where I was a trader. I traded bonds at Goldman Sachs. But I've been an entrepreneur. That's kind of my thing. And what we're working on now is Nectar. So Nectar provides cash flow-based financing to people who own and manage rental properties. So we have a pretty big focus right now on the short-term rental space, short-term, mid-term. But we also do long-term student housing, got some retail. Like we'll look at any cash flowing asset or look at any business that owns or manages cash flowing assets. But that's us in a nutshell.
So I got a question on that really quick. Can you explain exactly what that means in terms of you buying cash flowing assets? Like, are you guys like an investment firm? Like, you guys are a real estate company? Like, can you explain that a little bit more in detail?
Yeah, so you can think of us as an investment firm, but we don't take any upside in the property. I've been a real estate entrepreneur. I know how it is to work your butt off on the property or portfolio, and then you go to sell it and someone else is getting most of the upside. We're not getting the upside in these properties. What we're doing is we'll give you in advance on the cash flow that you're currently generating. So this is not a mortgage. Like mortgages, you should get a mortgage. Mortgages are going to be your cheapest source of capital. There are thousands of lenders out there. Yeah, so we don't take any of the upside on the property. Like we're not looking to be an LP, but you can use our capital for a down payment to finish renovations or furnish your property. People have also used our capital to buy other management companies. The whole point is we're fast and we're flexible. We work with people who have portfolios that are stabilized, period. If you have a stabilized portfolio, we can get you capital quickly. We aren't going to take any of your upside, and you can use it for whatever you need.
Got it. So what do you use as collateral, the actual property?
We don't take a lien on the property at all. So we have two products. One is a cash advance. It's a little bit more expensive. We have a lien on the property owning entity or the management entity, whatever the entity is. And we have a personal guarantee from the sponsor. And that's it. We are not on title. Don't have a lien on the property. Our other product is similar to pref equity, is what I call it. Except for we don't have any upside. We're a member of the property owning entity. You become a member of the entity, but you pay us off when you pay back your advance. So we don't get any upside. This is just a way for us to be a cheaper cost of capital because we're in the membership interest. It's from regulatory perspective, it's less expensive. So we pass those savings on to you. And that's our preferred route. Look, we want to give you the max amount of flexibility for the cheapest cost, and the pref equity product, we created it for that.
Got it. Yeah, that makes more sense. So we could go to you and basically just be like, hey, Derrick, we need $100,000. And right now I think a lot of private equities, Rafa, right around 12%, 10 to 12, 7 to 12, somewhere kind of right around there.
I think so.
Yeah. Is that kind of where you guys are at, Derrick, as far as that price, or is it a little bit higher than that?
Yeah. So we charge, it's gonna depend, of course, as usual, but we charge a financing fee. That's kind of how we do our pricing. Our financing fee is between 10 and 18%, depending on various risk factors. And then, you pay us back over 1 to 5 years. So if you do a 1 year term, we give you $100,000, you pay us back 110. 110 to 118, let's say. If it's over 3 years, you pay us back 130. It's kind of how it works. So it's just and that's typically where we are. 10 to 18%. 18% is that's the highest risk category. We're giving you the most money and we're taking the most risk. And typically in this situation, it's expensive, and you know why it's expensive. We're typically going to be lower than that.
It's cool.
Derrick, I don't know if you remember, but we talked like maybe a year ago, I think it was, year and a half ago, something like that. And it's funny, it just popped in my mind because I was so busy at that time when I was growing the business and we were talking about doing something together. And back then I was a little bit confused as to like how the whole thing is, but you explained it so well right now in terms of like the way it works, right? So let me ask you a question about this and correct me if I'm misunderstanding it. So do you guys take like ownership or equity when you guys invest with someone and take over properties like that? Or how does that work?
Yeah, so we will only give money to a company. So like you can't be individual. If you have properties in your name individually, you have to put it in a company. You have to have a business bank account. That's just what we have to do from a regulatory perspective.
Okay. And so then technically you guys are investing in the company as a whole, not in properties individually, correct? So you would need to see like financials, P&Ls, all that fun stuff in order for you guys to be able to come in and say, hey, we can do this with you?
Yes, we have to see financials and P&L for whatever the entity is. Now, a lot of people own individual properties in individual LLCs, and that's okay. That works. If you have one property in one LLC, we'll underwrite that one property in that one LLC. If you have 20 properties in one LLC, then we have to underwrite all 20 properties. But we attach to the entity. So like that's what we're underwriting. And a lot of the entities can own properties. And if you have 50 properties and 50 entities, we can underwrite all 50. If you have, hopefully you have a HoldCo and it's all there and it's like in one place. But if not, that's fine. Like we're looking at the entity level, and we don't have any get any upside, but we will, in order to get our best terms, especially if you want to go for higher dollar amounts, we will become a member of that entity. But again, we don't have control. We don't have any control. The only control we have is that you can't borrow money on top of us, ahead of us. And if you sell the property, you have to pay us back. Yeah.
Right.
We can't stop you from selling. We can just if you sell, you have to pay us. So that's kind of how it works. But it's from an economic perspective, it feels like a loan. You pay us an equal amount every month, and that's it. Just 3 years, you pay us 36 equal amounts, and then we're out.
I'm glad you said that because that was going to be my next question. It kind of feels sort of like a loan, right? Okay. Now, Jesse, I want to ask in terms of how the terms look and stuff like that with what you guys, that's what we were talking about prior to this, correct? Is that what your question was prior to this, Jesse?
Yeah, just like the finance. Because remember, if I was to go borrow private money right now, I'm looking at, and Rafa, you do this all the time, building this. I mean, it's 7 to 12% is typically what it is. So it's kind of in the same ballpark still as what most people are doing on private money. But you guys are borrowing against the actual LLC or company as opposed to the individual. So, okay. Yeah, that makes way more sense. So I have a question now. So what if it's a one-off person, Derrick, that's I have, 2 properties. I need to get 50 grand. I need to go do this. Do you look at, is there a qualification standard that comes along with this? Like a preferred, what is that called, Rafa? When you're a accredited investor, do you have to have something like that in order to come in, or what does that look like?
So here's what it is. You have to have at least 3 years of experience operating a stabilized property, that or portfolio. You have to have at least your property has to be stabilized for 1 year. That's not super set in stone. If you have a 10 property portfolio and 4 of them are are more recently stabilized, that's fine. We just need to know that you can get it all the way to stable and you can keep it there. And you can show a track record of really, you can, make it happen.
Can I ask you a question on that really quick? What do you define as stable in terms of what's the defining parameters for you to consider something stable? And you guys is
cash flow positive.
So it can be any cash flow as long as it's positive.
Cash flow positive. I mean, because it's different, right? Because short-term rentals, you can have a 50% occupancy and that be stabilized. Versus long-term rentals is easy. You say, well, it needs to be 90% occupancy. But we're gonna just look and see has it been cash flow positive in operations, not offline, that's what we're thinking about, stabilize, not, I was living in it for, 20 days and, rented out for 10 days. That's just not what we're looking at. That's not what we're doing. We're looking at someone who's this is a professionally operated property. We have and that's what we're looking for. So if you have two properties and they're stabilized and you've been doing this for a while, that's fine. Like we've done deals with two properties, but like, but we need to see like you're an actual experienced operator and it's actually stable.
Derrick, can I ask you another question? How does it differentiate from kind of like a working capital loan?
If you go to like there are all kinds of working capital loans. Like, you can go to like Cabbage before they announced, I guess it's Amex, they bought them. Or you can go to, some of these Blue Vine, something like that. And they're going to be much shorter term. They're going to be 3 to 12 month terms. And they're going to be way more expensive. They're going to advertise like a low rate, but that's like a fee that's like annualized. They're really going to charge, their APRs are like 50% actually. It's like we can typically get you much more money and we can stretch it out over 5 years. So like that's the big difference. Like we will give you more money now and we'll let you stretch it out over way more time. Because you have more time to pay it back, it ends up being less in terms of an annual, interest rate. Let's say if you want to convert it into like into a return. That's the big difference.
Gotcha. Yeah, I like that because I've done some working capital loans and I usually have to pay them back within a 12-month period is usually what I like to do. I remember that's why kind of we started talking last time because I was looking to expand and we were looking to do something like that. The people that you're giving money to, what is it that you see that they typically use these funds for? Is it for real estate investing or do you guys only focus on these type of businesses only that do real estate?
Yeah, most people are using our funds to like finish up a construction project or furnish a unit or put up a down payment on another property or a down payment on several properties. We've had people like buy management companies. So buy competing management companies. We've had people hire staff, although it's not that common. One guy buy a boat. He has a vacation rental on the lake. He bought a boat, to rent out with his rental. So we're pretty flexible as what you use it for, but most people are using it for CapEx and down payments.
Okay, and that money has that purchase or that use of cash has to be pre-approved with you guys, correct?
No.
Okay. I would assume you don't want some guy to just take it and pocket and go and buy themselves a Ferrari or something, right?
I don't mind. I mean, ultimately, to me, like I'm secured by the cash flow coming off of your existing stabilized properties. If you want to take that and buy a Ferrari, that's, that doesn't bother me that much. Now, I don't know if that should go out to the world in a podcast, but really, what I'm saying is that you have this portfolio of properties that's generating income. I'm using that existing income in order to pay me back. You don't
Sure.
I'm not counting on new income that you're going to use to pay me back.
So I'm trying to think of like the income. Is there a percentage rate that you guys need? So like say a break even point is like I have to have $2,000 a month, which is 90% occupied. And then the positive side, it's only like, I'm just going to give you an example. Like, 'cause a lot of people invest and they only make $200 a month off of a stabilized property. And you probably see that all the time. So like, is there a certain percentage that you need to make off of that property in order to consider that positive? I think Rafa just asked this in a second ago, but I'm just thinking about all the investors that invest typically long-term and they're only making, $100 to $200 on per door. So is that something that you guys would even lend on, or is there a percentage rate that you guys look at?
So yes, but not like here are the two things that we look at. Firstly, our minimum deal size is going to be 50,000. Like maybe we'll do 30,000. So if you're not making enough cash flow to be able to get a $30,000 advance from us, then that's the issue. So if you have like a couple of long-term rentals, you're probably not going to get there. Unless the long-term rentals are apartment complexes, which we do a lot of those. So like that's so I'd say that's one thing. Like you have to have enough cash flow to actually get to at least 30,000. And on a 5-year term, we're talking about probably 2,500 in cash flow. So you probably need to be making about $2,500 a month in cash flow across your portfolio.
Okay, so to kind of let me see if I'm understanding this correctly, Derrick. I understand the percentage, but do you guys have a ratio where you guys say, hey, let's say my properties are only doing $1,000 cash flow a month, that's $12,000 in profit for the year. Is there a percentage that you guys take from that to say, hey, with this is only how much you can get? Like, is there a ratio that you guys use for that? Like some sort of algorithm or something? I don't know.
Yeah, we have an algorithm. It's an algorithm. Like, we have a bunch of inputs. like how long it's been stabilized, what your cash flow is. We look at like a big component of the algorithm. If you're trying to just do the math on your own, it's like, can you withstand a 15% revenue decline? Like if your T12 revenue drops 15%, are you still able to pay us back? If the answer is no, it's going to be difficult. If the answer is yes, then we're probably going to be able to get something done. Like that's the we're going into a recession. I know things that feel a little bit better, but it's still an uncertain environment where revenue might be down 15%. That's not crazy. That happens. It happens in recessions all the time.
It's already happening in short-term rentals for sure.
Right. So like we don't want to we're not going to go into a situation where we know you can't withstand a 15% revenue decline. We're going into a recession. Like Jerome Powell talked yesterday and he was like, yeah, there's going to be more pain. I'm not letting up. Like the one thing I learned when I was at Goldman, don't fight the Fed. We're not trying to fight the Fed. The Fed says, the market's going down. We believe them. So that's what we're going to model it in.
Yeah, that's awesome, man. I think that's cool. Rafa was like, Derrick sounds super familiar. And now we're in this podcast, he's like, now he remembers you guys actually talked a while back. How long's Nectar been around, man? And I want to go, after we answer this, I want to kind of dive into the early parts of this, and then we'll segue towards the end of more about Nectar. But how long have you guys been a entity?
So like about a year and a half, in 2021, we officially organized. And I think now that I remember, I think I do remember, I think Rafa, did we meet on Clubhouse? Is that
yeah, it was probably Clubhouse.
Yeah, it was a long time ago. We met on Clubhouse, and then we ended up having a couple phone call conversations. It's funny, when Jesse told me if I heard it Nectar, I was like, that sounds super familiar. And then when I heard your voice, it like clicked. I was like, oh, I remember him. I was like, we had a phone call conversation. Yeah, this was back like in August or something.
Yeah,
2021. So quite a while ago.
That was when Nectar was first. Like we were early. Yeah, that was you were one of our earlier conversations. But yeah, so me and Brittany have been at it for a long time in the real estate business. So we've done a lot together. So this isn't our first venture, but in the Nectar iteration, we started in 2020. We got into Techstars, and we like organized the company like right before Techstars. So like that's kind of how it worked out.
That's awesome, man. Yeah, I think Nectar has. I mean, just from this short, we've been on this call for 20 minutes or so. There's a lot of stuff to learn. I think that it's really trying to unpack what you guys actually truly do. I think that's what Rafa was saying initially from the beginning, because I get what you're saying, but it's like unpacking all the layers, like almost like an onion, like what you guys actually truly do in that sense. So essentially, at the end of the day, you guys are just borrowing against an entity, not a specific person. And you guys are looking back 3 years of their actual book of business. Is that right?
Yeah. We really want to see that they have 3 years of experience, because we're trying to work with experienced people. Like our biggest risk is that you just started up, you realize it's harder than you expected. We're in a recession and you quit. And then we're like, okay, what do? Now we have to find somebody to operate the property. So we're avoiding that by trying to work with people who've been around for at least 3 years. They haven't quit yet. You're probably not going to quit year 4. You might quit year 2, but probably not year 4. So that's kind of what we're thinking from there. And we're looking at your property has to have been stabilized for about a year. That's kind of what we're looking at. So even if you've bought and sold and whatever, you don't have 3 years of experience in that existing property, that's fine. And we're lending against cash flow.
Derrick, let me ask you a question on that cash flow terms. For example, for me, like I don't know if you remember, but I do a lot of rental arbitrage, right? So I don't own any of the property. I want to say 55 of my properties are arbitrage and 22 are owned, right? And so does that affect it, even though I don't own them? Where you going to go, I don't know how I feel about that, even though I've been doing this for 6 years now and I've been at a constant, steady cash flow income with them? Is it something that you can go, well, maybe next year they're going to kick you out, so we can't lend on it? Or is it, well, your experience shows enough, and is there like something that you guys look at? Because the algorithm's only going to tell you so much, right? At the end of the day, you have to look at it and go, well, what's the risk factor here? Is Rafa going to lose those properties through these investors that he works with? Or is he going to continue to build these relationships? Because if you look at it, like I've had a significant growth, and without getting to that point of it, would I still qualify for someone that you guys can work with if I submit all these documents and go, hey, Derrick, what can we do now? What can you give me, or what kind of amount can you give me so I can go and buy something else now based on the fact that I only have arbitrage? I don't actually own the properties.
So we do arbitrage deals, and we've done arbitrage deals. There's a higher bar because it's more risk, and that's just the reality. It's more risk, it's a higher bar, it's underwritten a little bit different. We do want to see your leases and how much term you have left. If you have a bunch of leases that end in 3 months, we might not be able to get the deal done. You might have to go and get those leases renewed or get an LOI from, the current owner. Or like I might have to talk to the owner and get something in writing saying they're not going to kick you out in 3 months and we give you a 1-year term and then we're SOL.
It's funny you say that because not to cut you off, a lot of my leases, I actually don't like to renew because I want to have the ability to be able to leave if I need to. But I've been with these dudes for like 3-4 years, right? I mean, obviously we can talk to the owners and get the letters and stuff like that and extend leases if needed, if it was push come to shove, right? But it's funny because I like to have that like freedom to say, hey, just in case something does happen, I can get out of these properties really fast, even though I've been with them for 3-4 years now. You know what I mean?
And people do that. So like, that's not going to be a disqualifier, but what it is going to require. We have ways to mitigate these things. Cause look, I had arbitrage units. They were my own properties, but like, when we first started out, we were doing arbitrage. We might require reserves because ultimately if you have to move, you have to move. That costs money, So like, we can mitigate that with having higher reserves. I might have to hold it in a separate account that we have some control over. So like, look, we can be flexible and we find a way to work with people who have strong businesses. If you have a strong business, it's cash flowing, you've been doing it for a while, we see the margins are there, you can withstand, like with rental arbitrage. The problem with rental arbitrage is instead of sitting on an asset, you're sitting on a liability, right? A lease is a liability as opposed to a house that you own is an asset. So that just means the margins have to be bigger. Where we see things get in trouble is you have these arbitrage businesses. They might be making a lot of cash flow, but when it comes down to it, if revenue falls 10% or 15%, they're negative. And that is what is like, we're pretty strict about like, even if you're making a ton of cash flow now, if you can't withstand a 15% revenue decline, like we can't do it. Just because the house view is that things are going to get worse. Like, or like the house view is that, put it this way, the house view is that the Fed wants things to get worse. The economy might be fine now, but I'm just not going to bet against the Fed. So I have to like make sure that, you can withstand a revenue decline. But we can work with arbitragers. We do work with arbitragers. The big things are, I need to feel comfortable that you're going to be able to keep the units, or that you have shown that you have the capacity to move units. You're going to have higher reserve requirements because of that. And we're going to be really looking at your margins. Because, with property, if your margins go down, you can sell and we have a way. If your margins go down in arbitrage, we're just out of luck.
Yeah, I like that you say that because I talk about this all the time. A lot of these guys that are getting into the arbitrage game, they just go for a yes on any landlord, not caring how much rent they're paying, not knowing that the rent has a big deal with what they pay in terms of the revenue that they're going to make or the profit that they're going to make, right? Because if a property is only bringing in $3,000, and I'm going to talk about this, Jesse, over at your summit in 2 months or whatever. But if you get a property that comes in at, let's say, $3,000 a month, but you can only squeeze out $3,400 a month, and then you still got to pay for all your other operating expenses on top of that, you're not going to make any money, and you're not going to withstand a 15% decline. You know what I mean? It's difficult right now to get into arbitrage. I would imagine, Derrick, that you guys are probably going to have a hard time or a harder time lending, or not lending, but investing with people in their arbitrage companies because of this, because they don't account for a 15, 20, 30% decline in the bad months. I just had one of the worst months that I've had in the last 2 years this past month, right? But because I have cash reserves from all the great months in the past year, I made it through with no problem because I average at the end of the year. And a lot of people don't account for that. They think, hey, one bad month or one really good month, I made $30,000 in profit. I'm going to pocket all that, not accounting for the really shitty month where they're going to lose 15, 20%. And when you guys go in and you look at this, the point I'm getting at is, do you guys look at for the year spread in 12 months where you go, hey, or do you guys look at, I guess the question is, do you look at the full year term and say, hey, the 12 months, we saw that you did this and average, you did 25% in profit. So you could withstand a 15% because you only end up pocketing 10%. Or do you look at, hey, in February, you guys got crushed this much, but in July, you guys made this much. So because of this, we can't really lend on it because we don't know how it's going to go next February. Does that make sense? Does my question make sense?
It makes sense. We take into consideration, look, it's seasonal businesses. They're businesses. We've done deals were companies that make all their money in the summer. Like, there's a property in the Hamptons. I mean, they just don't make that much money except for in the summer. In the summer, we make a ton of money. So we structure around it. We require cash reserves. If the riskier your business and the more, like if you have really dramatic cyclical businesses, we might need control over those reserves. That doesn't mean that like it's still your money. So like if you request it, then we can approve it and we'll give it to you. But then you just have to pay it back. You have to put the money back in the reserve. So like the riskier it is, the more control we're going to want to have over those reserves. But we still, and we can structure around it. We've had deals that our payment is higher during the summer and lower during the winter to account for that cyclicality. So we've structured flexibility because we get it. And typically but we still like year over year, good months and bad months averaged out, you need to be able to withstand a 15% revenue drop and still be able to service our payment and have a little cushion there. That's a non-starter. If it's like, oh yeah, we're good. But like if you're down 10%, if you're down 15%, down 10%, then we're sorry. Like that just isn't going to work.
Yeah, I mean, you don't want to get crushed on something like that and not be able to squeeze those payments out, right? Jesse, I'm super taking over this right now. I'm sorry if you have any questions because I have a ton more that I want to jump into.
Yeah, no, go ahead, man. I was actually going to go into Derrick's beginnings, the origin story.
I wanted to go into. It's funny, Derrick, because a lot of times, like Jesse said in the beginning, we like to go into the background of the person itself, not the company. But I'm so intrigued with your company, and I'm sure a lot of the. I get a lot of the questions I get all the time is how can people get funding or money to expand or open their businesses or continue, right? Obviously, they can't do this to start a business with you, but if they're already operating and they want to expand, I mean, I get opportunities to take over apartment buildings all the time, and sometimes I pass on them because I just don't have the cash to open them up, right?
That's always the problem for a lot of investors that are doing this and that have cash. Like we're always deploying our cash into other assets. And there's a time where something will come and you're just like, oh man, I don't have the 100K or whatever it is right now to get into this. I just deployed whatever it is into another one. But also right now, and Derrick, you're probably seeing this, I'm starting to hoard money right now. Like I'm sure Rafa is too. Like I think a lot of investors are kind of just like hanging on to stuff and then like waiting for the next 16 months to for stuff to kind of default or become easier to acquire or so I think that's one of the questions I want to go into because I think that a lot of intuitive investors are doing this now, right? They're holding capital. They're still buying stuff, but they're not maybe spending. So I'm going to give you an example. Like acquiring 3 or 4 properties a year. Maybe I might now be acquiring only like 2 instead of the 4. Or I'm deploying $1 million a year, but now I'm only doing 500,000 into whatever it is that I'm doing. So how are you guys kind of dealing with that give and take that the economy does? And then you work for Goldman, so you probably know a lot of the back end, like the cyclical stuff. You're probably too young to remember 2008, or maybe you do to a certain degree. Yeah, you're probably like in elementary school in 2008, right, man?
I'm older than I look. No, I was actually I started my first really successful business when I was a freshman at Harvard with a couple of my roommates, and we were super reliant on Wall Street and the financial services industry specifically. And so 08 hurt. Fortunately, it convinced us that we should stick with school till this all settles out. So,
what business was it?
So I was a undergrad at Harvard. Harvard doesn't have a business school. In like 05, 06, 07 even, a bunch of people were going straight from Harvard undergrad to Wall Street, but they had no education. The banks were competing to recruit these people, but it's hard to again, it's work on their end. So we created an entity that took Harvard Business School students who used to work on Wall Street and taught financial, basically taught specifically skills in markets, investment banking, real estate to the undergrads. And then the undergrads would get into groups and do business case competitions. And the investment banks and some hedge funds sometimes would pay to judge these business competitions, these case competitions. And for them, they'd be able to recruit the students there and recruit the smartest, brightest, most best educated Harvard students, in finance. And they got a lot of brand recognition. Students, it was great because they got to talk directly to them, future employers. And at one point, the banks were paying $10,000 for these events. So you get 4 banks for a weekend event where they're judging a couple case competitions. It was a great business. Harvard wasn't too excited about it. We ended up getting in a little bit of trouble, but because they're a nonprofit and XYZ. But it was great business. That was a great business in 06 and 07. in '08, like they were like, nah, we'll send some pamphlets. We're not paying to sponsor this event. So that's what we were doing.
Man, so were you always super like one of those kids? And I always ask people this when they're, when they go to like these prestigious schools like this, were you always gifted like with academics, like that kind of, did you have that brain always, or was it something that you just kind of like picked up once you got in high school? Like I'm not academic at all, dude. Ask me like 9 times 9, I know it's 81, but ask me that in the morning and I'm like, dude, I don't know. You know what I mean? Like, were you always one of those like studious people, or like, how did that come about?
I don't know. Yeah. I mean, I was, firstly, I was a recruited athlete. So I got into Harvard the back way. I think I was the first student ever from my high school to go to Harvard. So even though I was recruited, I had to go to a prep school after I graduated from high school and do a PG year where I took like a bunch of AP classes so they could make sure that like I actually was prepared to go to Harvard because I went to like a segregated all black school in Southwest Atlanta. You know what I'm saying?
Yeah.
Like, that we're knowing it going to Harvard for. It was a great school. I loved it. We had a bunch of people in the NFL. We had the most players in the NFL for like 3 or 4 years. You probably know some of them. And I loved the school. Nothing bad against it. I loved my high school. But
Yeah.
but I had to do that, and then I got into Harvard after. It turned out it was easier. The prep school was easier than public school. It was us, it's me and like only 10 other kids, and I lived there, so I had access to teachers. It was great. I did better, honestly. So like it wasn't. So like yeah, I did well in school, I guess. I wasn't. I probably couldn't have gotten in regular admissions.
What sport did you play?
I played football.
Football. Got it. What position?
Played corner. It was a great time. Won a couple Ivy League championships. Made all Ivy 1 or 2 times. So it was a good experience. It started off 4 years. I wasn't the full-time starter my freshman year. I started like a couple games, got devastatingly hurt, dislocated a couple ribs. But then I was back at it next year. So, it was a good experience. Did that, ran a student organization, I helped restart a student-run nonprofit that volunteered, in Roxbury, did mentoring for kids. So I did a lot of stuff in college. College was great. I loved it.
That's awesome. Did you, coming from you said it was predominantly all black high school, like going into Harvard, did you feel like an outsider coming in? Like, is that school predominantly white? Like as a black man coming into a space like that, did you feel like accepted in a way in that school?
So firstly, after I left Westlake, I went to all boys boarding school in Connecticut. So like that was a bigger transition. Harvard, I was like, man, these are diverse. I got a bunch of black people. I was on the football team. It was like I had a bunch of community surrounded, and that was great. Harvard was great. But going to coming from a boarding school, that was a culture shock. It was tough for me. Like I was like, in my room crying. It was a tough transition. I mean, yeah, to be a kid, 16, 17 years old, leaving home and being by yourself, it's fine. But to leave that environment to go to literally from all black to all white, from a big overcrowded school to a small boarding school, that was tough. But then I was super prepared for Harvard. Like I went in there and I loved it. It was like Harvard was a good experience. It was an easier transition. I always felt welcomed. I was an outsider, you know what I'm saying, in some ways, but I was okay with that. And I was also very much not an outsider. I mean, I was on the football team. You had 200 friends right there, boom, immediately. Yeah. The black community at Harvard is really strong and really close. So a bunch of upperclassmen and people already there, they immediately accepted me and like brought me into their traditions and all that stuff, and helped me with classes and what I need to do. And I transitioned well into Harvard. Now my co-founder, she had a different story. I feel like it was a tougher transition for her, which is odd because she went to a diverse high school. But yeah, for me, it was good.
Yeah. I always like asking those questions because I think that, first off, I think these are discussions we need to have. I think that there's a lot of inequality when it comes to color in a lot of ways. Obviously, I'm Hispanic. Rafa is too. So these are just discussions I like to have so that people can actually hear them, because it's not always just these easy peasy like transitions that are from one spot to another. Like there's a lot of mental changes, and especially going through high school, being selected to go to this go to this college, then you're in a, you go to that school and you only have 10 people in your class. You said 10 people. Man, it can be traumatic in a lot of ways. But I'm glad that you're able to find like some sort of when you went to Harvard, that you got that acceptance and that you're able to endure that. And not only that, but those 2 years that you were at that school probably allowed you to kind of see things in a different way, and probably helped you when you got into Harvard, I'm assuming, to some degree.
It definitely did. I mean, yeah, there's racial stuff. I mean, there was. But like, honestly, I come from a long line of entrepreneurs that had real racial stuff. You know what I'm saying? Like my grandmother's father and uncle were entrepreneurs. They had a newspaper and a grocery store. They got firebombed 3 times, because they had a thriving business. I don't have to deal with that. Yeah. After like someone calling me a name or like, calling the police at Harvard, we had like the police got called on us. We were playing, games in the quad. Okay. This Harvard police, they came and they left and whatever. I lived my life. It's not like I didn't have like my grandfather, my father, and like the things that they had to deal with in their lives. It was just like, that they had to deal with things that were life-threatening and that were bigger, and that maybe did set me back in terms of I didn't get an inheritance from the businesses that they built that I would have gotten had they not had the struggles that they had. I did live in a neighborhood that was like literally segregated. We lived there because that's where literally white people let us live in the 40s, 50s, and 60s, and we still stay there. There are lasting impacts, but we have so much opportunity now. There are problems, there are real problems. I've gotten beaten up by the police, I'm saying? I've had like things, but like, man, the opportunities that we have now, it's just like the work that people, both black and white and other races, have done before us to get us to where we are is tremendous. And we have a responsibility for their hard work to make shit happen.
Yeah. I love how you put that into perspective that way, because there is a lot of hardships that people have gone through to get to this point where we're at today. And it's our responsibility now as the younger generation to make it better for people to come ahead of us. Right. And it all starts with that, right? Overcoming everything that you guys have gone through, and all of the things that you have to put up with, and having to build and do something better. Right. Everybody goes through hardships at some point in their life. And when you end up taking it as a positive and doing something positive with it, it's only setting up more people to do better with it, right? So I love the way you structure that, for sure.
Yeah, because a lot of people can have a very negative outlook on this, of like, these things happen, especially as you grew up. Because I had this with my family. My parents my dad specifically, he grew up in Central California, like, in the 50s and 60s. And he would tell me like we had to use a different bathroom. He's Hispanic. He was telling me these things. So like me growing up, that was like my dad's perspective. And, he would tell me these stories, and I'm just like, I almost didn't believe it in a way, because we were living in this different time frame. And I was like, my dad's Mexican. Like, he didn't have to deal with that stuff, but he did, like to a certain degree. But we get these stories kind of wrapped in our head, and you can there's 2 directions you can go. You can go the direction of like, I'm going to live in this, what's happened before, and this is how everything is, and see the world in that lens through whatever our parents told us. And there's the opposite side where you can be like, here's all the positive, good things that have happened. Here's how we've progressed. And you just exactly said this, like what everybody had to endure before you, you don't even get a percentage of that anymore going forward in the future where you are today.
And not just that, but like we have a responsibility because of all the work that other people have put in to get us here. But both people of our race fighting for the rights that we currently have, and people of the majority race who, like, yeah, there were people on the other side, but there were people on our side too. And they did a lot of work for us to be here. And are things perfect? No. Like there are real disparities that cause real differences in people's lives. We have the responsibility, based off of the fighting and struggling that's happened before us, to make the world better. When I'm a grandfather, I should be able to say the things that the society as a whole, the way that things are better than when I was 35, 25, 15, when I was born, when my dad, like, it's our responsibility. So take it. You know what I'm saying? Like, don't look around and be like, oh, the world is, ugly. Okay. Yeah. The world's ugly. Now what? It's better now, and we can make it better. That's what we have to do.
I love that.
Yeah. I love that too. So like when it comes to mindset, I mean, I always like asking these kinds of questions. Like, did this mindset that you have, has it always been on the positive side, or were you kind of like, did you have something that changed your mindset in a lot of ways, or did you just always have this kind of optimistic mindset?
Yeah. My mom passed away when I was pretty young. And I feel like when you have that, firstly, it never goes away. Like I still miss her. I have kids. She would love to be with her grandkids. You know what I'm saying? Like this. So it's something that like is with you and it's sitting right there. Every day you wake up and that's the situation. But also that just gives me perspective, like on the other challenges that are ahead of me. And I feel like that really helped honestly give me a more positive mindset because I can see how blessed I was that my community surrounded me with love and attention and helped me even with this tragedy happening with me, at a young age. My dad was awesome. I think that really helped, gave me perspective. And as an entrepreneur, you have to be, an optimist, or else you're going to be on suicide watch. You know what I'm saying? So yeah, I've always had something that I don't remember who told me, but your life can be a comedy or a tragedy, and you get to choose. Like stuff is going to happen no matter what, and you can decide if your life is a comedy or a tragedy. And I just choose that it's going to be a comedy. It's going to be like a hero story, and that's just what it's going to be.
Yeah, I love that, man. I think perspective goes a long freaking way, especially when and I've always talked about this in the show with people that listen to us on a regular basis. Adversity and dislocation builds people. It changes people. And I think that the moments were why is this happening? Why is this going on? But then as you start aging or you start learning more about life, you start looking at things in a different way. And it's that one tragedy, like you lost your mom, I lost my dad. Those things change your perspective on how you think about literally life. And I always and I told Rafa this before, and maybe people that listen to this, but dude, just waking up in the morning, I feel like I won $1 million. I literally feel gratitude every single day just for opening my eyes. The first thing that I think about, dude, is when I wake up is holy shit, we're lucky. I could have been born a freaking camera bag or a freaking Fila shoe or some shit, right? We're so fucking lucky, dude.
And we have indoor plumbing, you know what I'm saying? I can go and get a warm shower. For most of human history, that wasn't even possible. You know what I'm saying? I can just push a button and food shows up. I don't have to go hunt. You know what I'm saying? We have a good situation. There was another story that I heard that I'm not going to tell the whole story. It's long. But we as humans, we developed where they were you have to always be watching out for a tiger to show up and kill you and eat you and your kids. But there is no tiger, but we still have those feelings. So sometimes you have to remind yourself, it ain't no tiger. Maybe somebody will be disappointed because of I missed my revenue projections. Okay, they're not gonna.
Yeah, it's the fight or flight, right? Sense where back in the day, the biggest concern was getting eaten by a tiger or getting. I've heard that before, Derrick. And nowadays, it's your biggest concern, something that stresses you out in terms of the first world problems that we have around us, right? And it's that's not what we were programmed to do. And people sometimes take those problems and just put them into such a huge thing in their mind where it's dude, at the end of the day, it doesn't really matter. You're still alive. We're only here for a fragment of time, right? In space. This planet's been around for 10 million years. We're only here for 100 at max.
Which means you can just go big. For me, that's giving me the opportunity to just go big. Just try. Mm-hmm. Try things out. When it comes down to it, I'm super blessed. I'm fortunate. I live a low leverage life. You know what I'm saying? I don't need flashy and expensive things. So my floor is pretty high. I can have kids that I love, have a wife that I love. I get to run a business and I get to take a bunch of risk because worst comes to worst, I still got my house, still got my family. Yeah. My wife loves me, my kids love me, and they don't care. They don't really care as long as I can still, get them a Barbie at Christmas. You know what I'm saying?
Yeah, man, that's awesome. I love that. I love that mindset, and it's always cool to hear other people's perspectives on, the simple things in life. Because at the end of the day, it's we have all these goals and these ambitions and these things, but in reality, the very simple things that don't cost anything are the most, affluential or the most important. They have the most value. They hold the most value. At the end of the day. And I think that society nowadays has that completely freaking backwards, dude. If you just sat there right now, everybody listening to this right now, if you just close your eyes for a second and just think how grateful am I to like literally be able to go in and turn on hot water to take a shower? There's people that are living today in the 22nd century that don't even have that. So just to be in America, how fucking lucky, you know what I mean? Like, so just small things like that. Like, I think sometimes it just takes perspective for people to think about that, and little issues become, that aren't necessarily really issues. Like, we're just lucky, man, to be where we are, especially be born in like, the US, and there's a lot of other places that are, not a good place to be. So how fortunate.
Yeah, it's like Warren Buffett says, we won the ovarian lottery, right? To be born in this part of the U.S. We could have been born in a different part of the planet where the true struggle is finding a good shower or finding even a roof over our heads, right? Like,
or we could have been born in 1823 instead of 2023.
Yeah.
And
I think about that all the time, Derrick. It's funny, yeah. I would not do good in the 1800s, bro. Like, I'd be like, dude, you know what I mean? Like, yeah, no, we live in a great time.
You know what Rafa would be doing in the 1800s? He'd be arbitraging some shit. He'd be like figuring out like he'd have like some kind of like stone he'd be arbitraging, or some kind of like beer or something. Come on, bro. I know you'd be doing that.
I'd be doing some kind of business. I mean,
we're a long way from short-term rentals now, though.
100%.
I like it, man. Well, let's kind of we're coming up to the top of the hour right now. I do have a little bit more questions about Nectar. Rafa, do you have anything else before Nectar, before I ask him, what the big break is and all that other stuff? Or do you have any other thoughts that you could think of?
No, I mean, Derrick, I'm super curious about it. So maybe we can have a conversation another time, because I'm actually looking for funding to buy another hotel right now. So maybe we can work something out.
We got cash.
Yeah, man. Let's have a conversation. So, Derrick, here's we usually go at the end of the show here before we have any pressing questions, but be respectful of everybody's time here. Being that this is the big break show, we want to know, what was your big break? Like, what made you go from old Derrick to entrepreneur Derrick, or young Derrick to old Derrick, or to even Nectar, whatever the case may be? Like, do you have one defining moment that you can say, hey, because of this is my big break, and I am here today because of this one specific thing?
Firstly, to get to where you are in life, there are a lot of breaks. The ball has to bounce your way a bunch of times. But I think a couple that like really come to mind, like getting into Harvard. You know what I'm saying? Like I don't know. I didn't even, it wasn't even on my radar. So I got until like a football coach came to my school and said, and singled me out. So like that was a big break. And my business partners for my initial business, my current co-founder and wife, a lot of the most important people in my life I met during that time frame. That was a big one. Marrying my wife was pretty good situation. And that was a pretty good break. And I didn't even know. It was like, I didn't even know how good of a thing that was. Like, man, if you can pick one thing right, get the right spouse, like do that, get that, and that was a big break. So
that's cool. I love that.
Speaking of that, like, since you guys work together and stuff, does that, because I always watch like, couples that are, like Tony Robbins and his wife, or like Hormozi, the Hormozis, like them. Like, do you guys have like how's the business portion and like the personal portion? Is that separated? Or do you guys like sitting there having dinner, just like, yeah, we want to get, are you guys talking about the business all the time, or is it like, you guys separate stuff?
We talk about the business a lot.
Yeah.
We go on the journey of life together, as a partnership. And like, our business is the manifestation of our values. And like, so is there separation? I mean, it's pretty connected, but it's pretty separate also. We've just been at it for a long time. We've known each other for a long time. We've been running businesses together for a long time. So like, we have the way that we have our personal like household, we have our whole like personal situation is kind of run like a business. When you're married, you administer a lot of things. You administer a household and you administer a business, and you can take learnings from both. So they're separate, but they're separate, but they relate to each other. Let's put it that way.
So you're not waking her up at like 3 a.m. being like, I just got this idea.
At 3 a.m, is one of our children waking us up, probably. And I've learned now to write the idea down and send it to her, and she'll get it in the morning.
Yeah, man. Some of my best ideas happen when I just like wake up randomly in the middle of the night. I'm just like, dude, I'll wake up from like a perfect, beautiful sleep to like thinking of like ideas and stuff like that. It's freaking. I think it's like a blessing and a curse at the same time. Yeah. If you happen to have that. But yeah, I would definitely wake somebody up and be like, hey, I just thought of this. And they'd be like, dude, go to bed. What's wrong with you? What's the matter with you? 3 a.m.
Yeah, yeah. The same happens for me. I just write it down. I can't sleep unless I write it down. I was like,
Yeah.
it else it keeps running in my head.
That's awesome, man. Well, one of the other things about we talk about in this learn and apply. So something that somebody could do today, an actionable step somebody could make after listening to this 54 minutes that we've talked about already. Like, what's that one step that you would give as a piece of advice to somebody?
It's hard to end up where you want to be without being clear about where you want to be. You know what I'm saying? Like it's hard to get what you want without like going for what you want. So like at least have an idea. Yeah, you don't have to know exactly because the world is going to take you in twists and turns and whatever. But have an idea of like the direction you want to go. Look at your life and like, what is a step that I can take to just put myself out there? You don't have to get the whole thing. So for me, when I was in college, I wanted to buy properties. It's like, well, what's the step I need to do? Well, I need to see what properties are on the market. So I did, saw what properties on the market. Okay, well, what makes a good deal? All right, I like put some numbers together. What makes a deal? Like, what do I need to do? I need the money. Okay, who has the money? You know what I'm saying? Like, so just like pick something and actually do it. And sometimes what that means is like sometimes you have to do something that commits you. So like draft an email to someone who can invest and send it. Now I'm committed. He responds, I have to follow through. So I don't know. Maybe that's not actionable. I don't know. I could have come up with something better, but like that's what I said. That's
No,
what
that
I
was
say. Know where
that
you
was
want to
great.
do, and then just take the step that it takes to get there. It's simple, but like people don't do it. I don't know.
Yeah.
I say the same thing all the time, Derrick, where it's like just take 3 actionable little steps, something that you need to do to get to that point. It doesn't have to be an entire. Most people get so hung up on the to-do list and the entire business plan and typing everything up detail by detail. Look, if you want to buy property, look for them online. Then the next thing is to run the numbers, right? It's little baby steps that'll get you to where you want to go. Otherwise, you're never going to get anywhere. If you want to buy a car, how much money do you need to save?
And get a pre-approval. Like, if you need money for it and you're like, well, where's the money coming? Well, get a pre-approval. Like actually do it. You don't just say, oh, well, I'm never going to get approved. Go see. And then they're going to, if you get denied, then at least you'll know like
where you stand,
what steps it takes, what you need to do to get to the next, just like, you're going to run into a bunch of brick walls. So just get to that first brick wall, you know what I'm saying? And then figure out a way around it.
Yeah. I love that.
Yeah. A lot of people get stuck in that small. It's just thinking small, or like I'm not good enough, or I can't do this, or this is not for me. And not only that, but it's like that's one chunk, and the other chunk, Derrick, is like the steps that it needs to take to make those things happen. And most people don't even know where they want to go with their businesses. They have no idea why they're even doing it. Like you have to like literally write everything out. Like, why am I doing this? What do I want to achieve out of this? What does my first year look like? After meeting Rafa, like he does a lot of goal setting stuff. Like I never used to do that before. And now it's like I have a goal sheet every single day, that I literally check mark of what I need to do for that specific day. And I think those little things like that, small little tiny steps, are going to give you more confidence over a compounded period of time. Like literally that's how you make things happen. And you might think like today, like, oh, this is not anything, sending an email, but trust me, over time, you compound that, dude, you're doing a lot. You know what I mean?
You just I put priorities for a week. A bunch of things are going to happen this week. What 3 things are the priorities that are going to make things happen? And like just at the end of the week, I might not have done anything, but if I get those 3 priorities done, I mean, in order, if I get the number 1 priority done, it builds on itself. And maybe everything doesn't happen and I'm busy and blah, blah, but the one thing that was the most important thing I done. So, yeah.
Did you pick that up from The One Thing, the book? I do that on a daily basis.
I probably should read that, but I have not.
It's a good book. Well, it's literally what you just said. That's why I asked. It's literally what you just said. So you pick the one thing that actually truly matters and just do it. I used to have this gigantic to-do list every day and I never did it. And then I literally just, now what I do is I just at night, the night before I go, what do I have to absolutely do tomorrow? And I just focus on that one thing that I have to do tomorrow, because everything else just fall into place, or it's going to be just redundant tasks or work that doesn't really matter. It's just the one thing that actually is important that needs to get done, whether it's in the business, personally, whatever the case may be. So,
yeah. And look, you guys, everything goes back down to habits. Like if you have a habit tracker, get one. If you don't have one, get one, because literally everything that you're going to do to be successful is just a habitual thing that needs to be done on a regular basis. If it's you starting a business and you need to send out 10 cold emails a day, then fucking send 10 cold emails a day. That habit, like you literally will, once you start putting those reps in, we just talked about this over a period of time, like you're doing a lot of work, you're getting more skills, you're putting more reps in, you're understanding what you're talking about a lot more. So all that stuff over a period of time will help you be better in what it is you're doing. But you have to like literally create a habit out of it. Just like you're going to the gym, just like if you're, eating on a regimen, like you have to have those habits. And I think that that's what separates a successful person from an unsuccessful person, is like all those little tiny things that are habitual on a regular basis. And I could be wrong, but that's just me, talking out loud right now.
I agree.
Yeah, Derrick. So where can folks find you if they want to learn more about Nectar, if they want to connect with you, if they want to borrow some money from you guys? Like where are we heading, man?
Usenectar.com. That's the best place to go if you want to get some cash from us. If you have a P&L broken out by month, like that's the starting point. Have a P&L broken down by month. Have your stuff in an LLC. Have a business bank account. Have everything go through that business bank account. So if you have those things, go to usenectar.com. Apply. We'll get back to you. Typically same day or the next day. If it's after this podcast drops, we're gonna our system might break, and so it might take a couple of days. But so like sometimes we get these spikes, but we'll typically get back to you right quick. You can reach out to me, Derrick at usenectar.com. I try to respond to everybody. If you reach out to me, if you want anything, make it clear what you want though. So it makes it easier for me to get back. And I do have a high volume. So if it takes me a while, I'm not ignoring you. It just might have been buried. But like usenectar.com, you can, go there, and that's that's the best place to apply.
Hey, Derrick, I got a one last minute question. Sorry, before we get to socials, how long does it typically take for the funds to go through on something like this?
5 to 7 business days is pretty typical.
That's fast.
But a lot of times, like if you have all of your documents and everything ready, then you can connect your bank accounts, you put in your docs, we get on the phone, we can get it done pretty quickly. A lot of times the issue is that, people don't, or like it's not, their financials aren't clear. If things are clear and you have everything, we can get it done pretty quickly for the first deal. For the second deal, we've done deals as quickly as 24 hours. We already have your information.
Yeah.
Say, hey, we had somebody who, needed $500,000. He called me on Wednesday, and we were able to get it to him Friday. So we can move pretty quickly.
Very cool.
Man, I want $500,000 to invest. I'm gonna have to hit up Nectar. So what about social media? You guys have any social media stuff going, or anybody can connect with you on social?
Yeah, like Jess at usenectar.com or Keith at usenectar.com if you want to reach out to somebody who's going to get you through. We're on Twitter, we're on LinkedIn, we're on Instagram, we're on Facebook. I don't know the handles, but we're on those places.
Sorry, just get them over to us so we can put them on the notes afterwards. They'll be below, everybody. We'll have them below.
Yeah, I love it, man. Well, there it is, folks. Derrick grew up in Atlanta, came to Harvard School, making stuff happen, is running a successful business. And I love that you have the Goldman stuff behind you, because people don't understand financial stuff. Like you went to literally the school to learn a lot of these things. And then you went into Goldman, which is like one of the top freaking firms there is. So you probably knew already, being in there with the entrepreneur mindset, like here's how we can make things easier for people to get money quickly. And so you have that like financial literacy in your back end, plus the education, and you marry that together, and that's Nectar, man. That's pretty awesome.
Yeah. Goldman, at Goldman, you can see cash move pretty quickly to opportunity. And that should happen for you all. If you're a real estate entrepreneur, cash should move quickly to your opportunities also. And that's why we started Nectar.
Yeah. I love that, man. And you're right. Like sometimes you got to move quick on some of these opportunities, and you don't have time to wait around. So there it is, folks. Derrick, I appreciate you for being here, dude. I look forward to connecting with you a little bit more. And if anybody has any questions, we'll leave information down in the show notes. And as always, please like and share this with other people that may potentially need Nectar to some degree, or even if this didn't resonate with you, send it to somebody that does, or that it potentially could. So any final words, my friends? Rafa, Derrick? Nope.
No. Yeah, thanks for coming on, Derrick. Appreciate it, man. This was very helpful.
Yeah.
Thanks for the time, guys. I enjoyed the conversation, and I hope this hope it's a good show or a good episode.
Yeah, thanks, man. Appreciate it.